Hello, everybody. Welcome to ETF Edge, your guide to everything ETFs. I'm your host, Bob Pisani. You know, at a time when rising tension is sweeping the country, interest in investing around social themes, social justice themes in particular, has never been higher. Today, we're going to be discussing one of those ETFs and the concept of ESG, environmental, social, and governance in general here. We're going to guests here, a series of experts in this particular area. Marvin Owens is the Senior Director over at the NAACP, who will discuss the world's first racially empowering ETF. That's the Impact Shares NAACP Minority Empowerment ETF. I know that's a mouthful, but the symbol is NACP. Joining him, Impact Shares CEO Ethan Powell, as well as Ben Johnson. He is the Director of Global Exchange Traded Funds Research over at Morningstar. Marvin, let me talk with you, or start with you, give us a little bit of background on this particular ETF. It's been around for a couple of years. The assets under management are still pretty small, although they have been growing. Discuss how this was created briefly and what you're trying to accomplish here.
Well, thanks for having me. We see this fund as the next evolution of in our corporate advocacy work around closing the wealth gap for African Americans in this country. The NAACP had been doing corporate scorecards for the last 25, 30 years, in which we would gather data from corporations and score and rank those companies along their commitments to hiring in C-suites, supplier diversity, community engagement programs, and the like. And we saw this as an opportunity to really kind of take that advocacy to the next level. It was a wonderful opportunity presented by Rockefeller Foundation and Impact Shares. And we wanted to get involved with this because it's important that corporate America really do more than make statements about their commitments to closing the wealth gap and ending racial discrimination, but really take steps internally and externally to make sure that's true and gets lived out in how they function and operate as businesses.
So you've been doing a corporate scorecard, you mentioned this, for 25 or 30 years. Sounds like the NAACP has been doing ESG, a sort of ESG is what you're describing, for a long, long time. How do you feel, Marvin, about how the whole ESG business is evolving? Is it evolving in ways you think is the right way to evolve? There's a lot of debate about what goes in these, what the emphasis is on them, for example.
Yeah, I think it's a great point. We have been at it for a long time. The problem that has existed with ESG is that the S has been very, very difficult to define. And that's why an organization like the NAACP, with its 111-year history of being advocates for African Americans in this country, is the right kind of organization to be partnering on this kind of work, because we've had the track record and history of doing this work. That's why I think it's going to change in terms of creating some sort of standard, some sort of baseline for folks to understand what does it really mean to work hard to eliminate racial discrimination in a corporate environment. So that's why I think it's important for us to have been involved in this effort.
Yeah. Ethan, let me turn to you. You were involved in creating this, and I want to get to talk a little bit more about what Marvin said about what is in the S in ESG, but you know, what's remarkable to me when I look at this is again, I see a very heavy emphasis on Amazon as an ownership stock, Apple, Microsoft, other big cap names, the Johnson & Johnsons of the world. How do you decide what goes into this kind of fund? What decisions go into it? And why are so many of these ESG funds so similar? Why do they all have the same mega cap names, it seems like?
Hey, Bob, that's a great question. And for us, it's really about evaluating the social and environmental outcomes based off of, do you have the right people, process, and philosophy to accomplish what you're setting out to accomplish? And just as you might pay a sub-advisor for an actively managed financial outcome, in this particular situation, we're paying the NAACP all of our net advisory proceeds to help fund their corporate engagement and to achieve these actively managed social and environmental outcomes. So, and then to answer your question as far as the underlying holdings, we don't pick the holdings, right? So we work with the NAACP to craft what it means to be a good corporate citizen through the lens of the NAACP, specifically as it relates to issues impacting people of color. So as Marvin pointed out, that's supplier diversity programs, that's digital divide programs, that's diversity on boards and senior leadership, that's anti-discrimination, hiring, pay, and promotion practices. So once we craft sort of the priorities from a social standpoint, Sustainalytics, who's our ESG research partner, scores the public companies based off of those criteria, arrives at the top 200 scoring companies, and then Morningstar, as our index partner, creates a index that is designed to minimize tracking error to the broader market. So you've got your financial beta with what we call social alpha, and financial alpha, superior risk-adjusted returns, social alpha, superior corporate social outcomes relative to your social and environmental priorities. And again,
go ahead. Finish your point.
There are some crossovers, and mega caps are disproportionately represented because, frankly, they're the ones that are committing the resources, not only to having these programs in place, but also reporting on the programs. And it's a lack of transparency and data in a lot of cases as that ends up crafting who actually gets in the index.
Yeah. Well, let me just talk about what goes in the index, because Ben, Morningstar, you've got the Minority Empowerment Index. That's what we're using here. That provides exposure to U.S. companies that stand out there for their commitment to racial and ethnic diversity. Tell us about that index. Tell us about how you decide what goes in that. And is this part of a broader trend, particularly this ETF here we're talking about today, more specific ETFs in the ESG spaces that address specific social issues rather than just rather broad ESGs, for example? Is there any trend here?
Yeah, Bob. So, well, I'm coming at it from a research perspective, and my team's not directly involved with the manufacturing of the indexes. I think one of the key points that both Marvin and Ethan have touched on is data and data availability and the quality of data that is available to form the foundation of all of these ESG indexes, be they focused on a more narrow theme, as is the case with NACP, or be they broader spectrum ESG. There are inherent challenges in this space defining what is success and what is failure across all of these different criteria. And generally speaking, what you've seen is that among the 90 or so ESG ETFs that are out there today, there's really only a small handful that focus on more narrow spectrum social issues. So 9 of the top 10 ESG ETFs right now account for about 70% of all the money that investors have put into these funds. And 9 of those focus broadly on E, S, and G, and look to balance, as Ethan deemed it, the financial beta. So investors want broad market exposure, but they want broad market exposure while also simultaneously trying to invest with those companies. They're going to make a dent across all 3 of those criteria, be they environmental, social, or governance related. Yeah. And we've seen real meaningful flows into all of these funds in recent years. And I think it's a trend that's only going to continue. And I think the data and the definitions are only going to get better with time.